To get to understand the cryptocurrency market, you got to start with the first one, right, which was the first decentralized, which was Bitcoin. And I did mention Ethereum, and we, in the question and answer, we talked about, physical gold and silver a little bit. But really, to start, I want to just talk about diversification, because I want you guys to understand that I don't think that Bitcoin is the only investment that you should make. I don't think that any cryptocurrency is what you should do the majority of your investing doing. I think that diversity is number one in investing, and that you should consider that not only on the inside of your portfolio, but overall. You shouldn't be putting all your eggs in one basket. That's a very common saying in any investment. But I am what they call a Bitcoin maximalist, where I feel like that's like where I want the majority of my my wealth to be stored in, of all the cryptocurrencies. But, on the other side of that, I'm holding, maybe 16 or 18 other currencies right now. So it's not like that's the only thing I'm holding. But the reason I'm holding those other ones is because they have good returns right now. They're a lot more volatile than Bitcoin is. And as well, I can get gains from that to get more Bitcoin. All right. So that's kind of what I'm using it for right now. I have a goal of getting 10 Bitcoin within the next 6 months. I hit the first one really easily. And actually, if I cashed out right now, I could just take those and pull them offline, and I'm good for my investment portfolio. But the idea for me is invest into a number of other ones. This was yesterday. In Blockfolio, the app, this is one way you can measure your gains. You can look at different currencies.
Last Sunday, what was it, like 11,000?
11,000 last week, okay? So today, it's actually even higher than that. I'm just refreshing the page. It just hit 17,000. I don't know if you can see this on those cameras or not, but there's just 17,000 from last week to this week, $6,000 up, from last week. So there is a lot to be said about diversification and timing the market, to get the good buys and buying in at the right time. So now I'm looking at cryptos overall as part of my retirement investment. Okay, I'm not at the point where my money is that can't sustain me for the whole year. I'm not going to just try and cash out and use this to take over my job, but I can put this towards my retirement and set that up to help me, because I don't have a 401k. I don't have any, either of my jobs don't offer 401k. Nobody's matching funds that I'm putting in. So, the money that I invested into here was based on the fact that I needed to invest some of my retirement portfolio. And so this is one of the investments that I did. And I had a few $1,000s sitting on, for retirement. And I already had some physical gold and silver, actually physical gold and silver back when I started, putting the money in 2015. But basically, I'm not, and I recommend highly that you get physical gold and silver. That's actually the stuff that I bought with just the currency from what I've already pulled out. So this portfolio doesn't reflect all of the money that I put into crypto, but it's the majority of it right now. So basically, I want to say this again, diversification, period. That's like, I would say it's rule number one, but because we're going to do this, we're putting this online, and there are going to be other people in the audience. I'm going to start even before diversification as far as investing, but you could consider it number one in investing. And let me say this clearly, I'm debt-free. I don't owe anybody a penny, and the reason, that is because I've been working 2 jobs for a number of years, and I've been saving. I've been living below my means, and so I'm well diversified. I don't have any risk by putting my money here on the market, and I want to encourage you guys that if you're considering, that's the way you should be thinking about things, is diversification, gold, silver, real estate. I'm building, a house on some property that I have, because I don't want all my money to be tied up into something like this that is very volatile. Not this, but cryptocurrencies. So just to be clear, I have made a lot of money in cryptocurrencies, but this is only, a fraction of my investments. I don't want anybody to feel like I'm telling you, throw all your money in here, and, that's like, you don't want to gamble. That's a gamble. That's not investing. That's a gamble. And so I don't want to, to say that. So now what I do encourage people to do is to save. Number one, there's a 52-week money challenge, starting with $1 the first week, and you double. Actually, excuse me, not double. You just add $1 for every week, and by the end of the year, it's $1,300 if you have zero savings, which actually is a significant amount of the people in the U.S. If you have zero savings, you can have $1,300 at the end of the year just by adding $1 every week to your savings account. And in 52 weeks, you end up with a good, a nice little, cash reserve. But basically, number one, I think saving is the where you start, right? For any investment you save, I don't think that you should even worry about investing until you have extra. Okay, you can't save what you don't have, right? If you're trying to put money in that you need for your groceries and then you lose it, that's not investing. That's gambling, and it's gonna bite you eventually, So you got to be very careful. So save money is number one. Number two, only invest excess, right? You don't want to invest what you need on a regular day-to-day basis. You want to invest what is extra, right? What you have that you've already saved that's allocated specifically for investment, right? And if you haven't, this is the benefit to if you haven't started investing, if you haven't started your portfolio, learn this for free right now because it'll cost you to learn later. If you throw your money out there, you get burned, it's going to cost you a lot instead of just understanding this from the beginning. So number one, save. Number two, only invest in excess. And this is also a part of diversification. You don't want to actually have all that you've saved in excess going into investment. You want some of it as a cash reserve. Dave Ramsey is an advocate of that. He says save like $1,000 first as an emergency cash, right? Because all kinds of things happen and you can't, and you don't expect it, and then it might put you in a bind to where not only do you not have that money, but you're overdrafting every charge now that goes into your account. So you want to have a cash reserve. You want to have on top of that cash reserve, then the money extra than that, you want to divert a portion of that to investing, right? So number one, save. Number two, invest only the excess. And most of us, aren't taught investing in school. And because of that, a lot of us, are really intimidated by when you look at a trend chart or you look at technical analysis. When I started, I had no idea. I know green means good and red means bad, and I know going up is good and down is not good. But I didn't understand, these candles. I didn't understand that each of the candles has a value meaning to it. The shape of it determines what it does. I didn't know what the wicks, I had a general idea of where it is, what it means. But, you learn that over time. You don't, you got to start somewhere, right? So I know it can be kind of intimidating in the beginning, but basically because it's intimidating, a lot of people mess up from the beginning because they're like, I don't know what to do. And then again, it's kind of like gambling. You put all your money on, red 7 or something, and it's like, that's not a good idea. That's not investing. That's gambling. So because we're not taught in school investing, we don't understand how to manage risk. And I think diversification is one of the pillars of investing, and you could consider another pillar managing risk, or even the base of that pillar is managing risk. And so basically, you don't want to lose your money. That's what it comes down to. And so understanding how to manage the risk and understanding how to diversify will help you to get to that point. The average family has only $4,200 in savings. They are over $100,000 in debt. Over 40% are not saving for retirement. So this sounds familiar to your situation. It's okay. You're not alone. But you just have to understand that, you need to start saving. That's really what it comes down to. Because if you aren't able to live below your means, you will always be in the same position. You will always owe someone else, and it will always cost you more to live than you should need.
Start saving and stop spending.
Exactly.
If you don't need.
Start saving, stop spending. That's right. Okay, so let's say you finally do get to save some money. You've got your cash reserve. You got money on top of that to invest. A lot of times what people end up doing is, you have that in a savings account, right? And you see, I'm getting almost 0% for, me putting my money in the bank, so I should invest it at 2%. And so, 2% isn't enough to hedge against inflation, right? So you're actually losing money by leaving it in the bank, right? And a lot of people understand that our money value is going down. It's been going down for decades, and so I got to do something with it to keep it up, right? So that's where the next thing comes in, where people put their money, all that money in the market, and then let's say that you do have some success and it goes up 100%, and you're like, yes, I just doubled let's say it was $1,000, I got $2,000. You go to bed, you wake up, and now your $2,000 is $500, and you're like, what just happened, And so you panic and you sell, and then you just took 50% loss on the money that you put on the market. And really, that's not because the market stole from you. It's because you were not prepared. You don't have a plan. You didn't know how to manage that risk. And in fact, you handed over your money to the market, and the market gladly took it. And there are whales out there that understand the psychology of investing and take advantage of the fact that people are willing to give them money, so they do it all the time, and they happily take the money that you're willing to give them. So basically, we don't want to throw all our money out there. We don't want to. We want to be smart about how we do our investing. And now I want us to make clear, when I say diversify, I don't mean on the stock market put 33% into high risk, 33% into moderate, and 33% into low risk. A lot of the financial planners that are telling you things like this and saying you're quote unquote diversified is because that's the money that they control, that's the money that they make a profit off of, and they're not going to recommend, many of them, your money outside of what they can control. So they're not going to tell you put it in real estate. They're not going to tell you to put it in physical gold and silver. They're not going to tell you invest in your own business, and grow your own business, because they don't get a cut of that. So some of the good ones do, but the majority of people out there are going to tell you, oh, you just put some high risk, medium, low risk, and then now you're quote unquote diversified. What I'm saying is go outside of markets, ideally something physical in your hand that you can hold that can gain value over time, and diversify. So now, like I said, even if you found a good investment and you watched it go up, and then you can't watch the market 24 hours a day. And so that things happen where it dips, and then the majority of the time you're going to lose money, and it's really gambling, because the trend is that just like in you go to a casino, the house always wins, right? Eventually, if you play the market long enough, the house always wins. Jesse, you've got the nothing. No, you're good, man. I just wanted to give you a hard time about it. Yeah, I know it. It's every week. AJ will see like, oh, here he comes. All right. Well, you are noticed. So essentially, when you're putting your money on the market without a strategy, without understanding market trends, without having an exit strategy, you're doing a white-collar version of gambling, of legal form of gambling. And just like I said, the casino, the house eventually wins. And you're going to lose some of the money that you got, if not all of it. And so you got to have, a plan going in. And so again, just quickly, number one, save. Number two, invest. Number three, diversify. So invest only your excess. And number three, diversify into multiple cryptocurrencies, diversify into investments outside of crypto. And like I said, I've done that from day one. My first investment into cryptocurrency was a fraction of my investment portfolio, right? So you don't ever want to put it all in one place. Now, and if this is the only thing that you get from this, all that I'm going to talk, this full 30 minutes, then this is going to be enough to put you ahead of 80% of the market, okay? Because there's a lot of green money that goes, when I say green, greenhorns or people that new money, a lot of new money that goes into the market that, like I said, people, they hand their money away because they don't know what they're doing, and it catches up to you eventually. And so you got to have a strategy. And if you think about these three things, as you're going into it, I think it's the 80-20 principle applies. You're at that 20% that's going to make the right amount of money, be able to keep onto it, keep a hold of it, and watch it grow. So now, I bought into Bitcoin, I told you guys, at $248 and in 2015. And I understood that it was an investment. I understood that there's possibility that I would lose it. But really, I believed in it as a project, as like a social project that I saw fluctuating, right? And I believe in giving power and security and privacy to the little guy, because Wall Street does not do that. Wall Street gives money to a very small amount of people that have the inside scoop and know when to buy in and know when to sell, and then can leverage all the money that they've already made against the little guy, and the little guy pays for it every time. And so when Bitcoin came around, I was like, man, this is awesome. This is an investment that I believe in. It's something that I hope it does well, and I'm happy to give my money to something like this that could empower the little guy. And so, this is just a fraction. I'm not saying that, with cryptos, there's incredible opportunity for gains, but you want it to be only a fraction of your investment and only a fraction of your money, period. You don't want to use money that's got to go to an auto loan, that's going to rent, that's going to groceries, because that's going to bite you. All right. So I didn't hear about Bitcoin until around 2013, and, on its trend up, and people were talking about it. It's like, hey, this is a cool new thing. Went up to $1,000, and it came back down, and was around 400 or so is when I started thinking, hey, maybe I should buy into it now that it's down, And I looked in 2014 in Coinbase. I started hearing Jack Spirko talk about, hey, if you're ever considering getting Bitcoin, you need an account first. Sign up with an account, and then whenever you want to buy in, you can buy in. I was thinking that's a good idea. I still didn't do it till 2015 when it had dropped down even into the $200 range, and I was like, yeah, I definitely want to buy a piece of this. And $200 was something I was comfortable. That's not a big deal, $200. That's a couple of meals eaten out for a lot of people, So, no big deal. And from 2015 into 2016, the money doubled. I was like, hey, that's awesome, And I kept watching it. This year it went up again and it doubled again. And I was like, yeah, awesome. I'm gonna pull my money out. I've made my money back twice now, and so that's great. And when I pulled my money out, I noticed there was a new currency there in the Coinbase app, and it was for Ethereum. I think I mentioned this to you guys. This is what the Ethereum logo looks like, and it's ETH is the ticker number, and Ethereum is in Coinbase, and so it was around $7 when I started noticing it, and I was thinking, I don't know anything about Ethereum. I don't know what they stand for. I don't know anything. I'm not even really interested. And then, a couple of days passed, and I'm thinking, hey, it's pretty cheap. I should check it out. What if it is the new Bitcoin, And if that's the case, this is a bargain to get in at the price. And so I did a little bit of research, and I was thinking, you know what? I've already made all this money on Bitcoin. Why not invest it back into Ethereum? It's free money. I have my initial investment back, so I put it into Ethereum. And by this time, it was $10. And I had read into Ethereum, and I was realizing this could be the new Bitcoin. It's an interesting platform. There are a lot of major corporations, Microsoft, Intel, and I just went blank on the third. But some huge players in the industry are getting behind Ethereum, and I was like, it's probably a good idea. So at $10, I bought in, started telling Miguel about it. I was telling Josh about it. It was about $15, and it was kept going up. And so I kept putting money in, right, and more than I had originally invested, because I kept seeing it going up, and I was like, this is doing good. And generally, that's the way I like doing things, is diversify my investment. So not only am I going to not put it all in at one time, I'm going to buy in a percentage, right, diversify everything that I do. I'm thinking, how can I split this up to make it more manageable? And so, bought in a little bit, saw it go up again. Hey, I'll buy in a little bit more, saw it go up again, buy a little bit more. And so eventually, that hit, a couple 100% return, and I was like, this is awesome. I need to start. And I had already started studying other currencies, because Coinbase only allowed Bitcoin and Ethereum. And so I started looking, how do I get other currencies? Because I know other currencies. I'd heard about Bitcoin back in the day. I'd heard about Litecoin. I'd heard about Darkcoin. And I thought it was Doggy Coin back in 2013, but it's Dogecoin. It basically, I'm actually invested right now into Doge, and it's doing very well. But yeah, okay, nice. Okay, so I had heard about them, but I didn't know where you could get them. I didn't understand the platforms. And if you go to Poloniex and you see all these decimal places and all these zeros, you're like, this doesn't even make sense, They're not in American dollars, and so it's kind of, you gotta, I do not want to do math about anything. That's not the farthest thing from my mind. And so I was trying to study, how do you do this? How do you make the conversions, and how do you do this the smart way? and I found some other, investments to look in, and Ethereum was doing good, and so I started taking the gains. Once I hit, it's like 250% return on Ethereum, I started, again, I'm thinking diversify every one of my investments, and so I started pulling money out from Ethereum and going into other currencies, and it's doing very well for me. What was the last number? I don't even remember. 17,000? Okay, so 17,000 since February 2nd, okay? That's just over 3 months, under 100 days. And if you consider that I'm not risking any of my money, this is all money that was given to me for free by the market, and you guys need to think of it that way, because when you start thinking, oh man, I need to buy into here, and not watching the market for the right times to buy, then it's not only costing you money, but you're not getting what the market's willing to give. That's one of the things Josh was talking about. You want to take what the market gives and, keep from giving the market when it wants to take from you, right? So basically, diversify. That's the biggest thing, I want to get across. Save, only invest the excess, diversify your portfolios. And there's no way I can get in this little bit of time that I have left all the things that I want to touch on to help you guys understand this. But that's why we got Facebook. That's why we got email. That's why we got, FaceTime, where I can, help you guys and walk you through some of this stuff. But basically, so I went from the $500 profit from Bitcoin at the beginning of the year to over $5,000 in 50 days, because I diversified. That's what it all comes down to. If I had left it in Bitcoin, I would make gains, but not as fast as I did because I diversified, right? So that's kind of the principle I'm trying to talk about here. So the thing is, when I diversify, I got to figure out what these other companies do. Why do they have value? What brings up their competition against the other currencies? Because I can say, hey, this looks cheap, but Josh, we've seen what was like a dozen currencies got delisted, and when they get delisted off of something like Poloniex, which is one of the larger trading platforms, they're gonna tank, because once you take them off a mass market of people, then people are like, whoa, this is garbage. I'm gonna toss it, whether or not it is, and that's one of the reasons you diversify. Because if I had one of those cryptocurrencies and thought, hey, I'm making good profits and put it all in there, I wasn't there to watch it when it dropped, because Poloniex says, hey, we're going to delist this currency. So diversification is key. Number 2, research. We got to, I can't do all the research there is. There's just too many. There's probably, about 100 currencies on Poloniex right now that you can invest in. And that's one of my favorite marketplaces is Poloniex. But because of the fact that there's 100 of them, I can't spend all the time that I want to in researching. I have done, and when I say research, I'm talking about really, I need help. I can't do it all on my own, and that's why I'm doing these workshops, is because I hope you get interested. I hope you start doing the research, find out what you feel comfortable investing in, and saying, okay, this is how I'm going to do it. This is how I'm going to diversify, and then we can communicate, and you can say, this is doing well for me, and I can say, good, okay, this is what's doing well for me, and we can feed off each other, and we both benefit, right? So when I say research, where do I get it? I'm a black belt in Google Jitsu and Kung YouTube. I seriously, I get so much information. I think YouTube is the university of the future. I mean, CEOs and the professors from some of the leading colleges put their content out for free and are willing to dump their years of experience. If you want to listen, if you're interested in going and finding out how to understand these market trends, the technical analysis, they're willing to give it to you for free if you want to do the invest that time. And I don't have enough of it to do it all on my own, so I need help. I just started reading last Tuesday, found out Princeton also did a textbook. Research. There you go. Bitcoin and cryptocurrency technologies. They did a textbook last summer. They released it, and I'm probably about 200 pages in, and it's a long read. Getting to understand the market and getting to understand, why this is going to benefit society. Because every time I talk about this, people are like, "Come on, digital currency, like." That's like, what do you call Chuck E. Cheese? It's like giving me tokens to Chuck E. Cheese. It's like, what's the big deal here? Anybody can change ones and zeros, and it can disappear, and that's true with your American dollars too. All it takes is an entry in your bank account, and boom, and that's gone too. But the truth is, I do need to do the research. And Princeton basically, they said that I'm going to read this. I think I've got a slide here with what their conclusion was. Here we go. Some people are excited about Bitcoin because of the underlying technology. Others are excited about its commercial possibilities, yet others about its social and political implications. Reasonable people can disagree about the latter two, but we hope this book has convinced you that technology, Bitcoin, is deep, novel, interesting, and based on sound principles. Beyond Bitcoin, there's a fascinating world of alternative cryptocurrency designs that we're just starting to explore, some of which one day may be more important than Bitcoin itself. So they're conceding that Bitcoin is number one. It's the biggest. It's the most revolutionary because it's the first. And Satoshi Nakamoto created these solutions to problems, they're real-world problems about currencies. And because he found those solutions, that's valuable software. And people are willing to pay for valuable software. And now they're using that software as a building block. Because it's open platform, you can tweak some of the code that's out there because it's all verifiable. It's all auditable. You can tweak that and make your own currency. You can make a Josh coin and a Jesse coin if you want to. Now, there's no one to say that they're going to buy it, but if it is innovative, if it solves problems, people are willing to invest in it. And that's what's happening. There are hundreds of other currencies. There are ICOs coming out almost, I don't know, every month for sure, if not every week, where you can invest, where they're at the ground floor, which does not happen in Wall Street, right? You have to be somebody, a CEO of a Fortune 500 company to get in on the ground floor of most companies that release the initial public offerings, IPOs on the stock market. It's not the same with cryptocurrencies. If you're willing to do the research, find out when it's going to happen, what platform it's going to happen on, you can buy into their shares at less than a penny, and in many cases way lower than a penny. And even just when it hits the market, you guys know what happens. When something new hits the market, people are interested, they'll put their money in it, and you can see 10, 20, 30x return on whatever money you're willing to put in. But you have to do the research to find out where it comes from, what makes it significant. And honestly, there's so much more I want to talk about, but the truth is the ICOs are going to go up, regardless of whether they're worth anything or not, because they're new. And so if you could put any money into it, there's these guys, the cryptocurrency market channel with this guy Ty Zen, and he talks about, he goes into a ton of ICOs, and one of the things is he talks about, I don't even care about 70% of my portfolio. I don't even care if it goes to zero for 70%, because 20 to 30%, he divides into 10. 2 or 3 of the investments that I make are going to hit 20x, 30x, and it's going to pay for all the other 70% that went to zero. And he said most of the time they don't go to zero. That's the worst case scenario, that 70% he doesn't see anymore. And in my experience, it hasn't been anywhere close to that. I've only made money, like all these, I may have lost $70 of 17,000. I have a little bit investing strategy than he does, but basically, if you're careful about what you do, you can see the potential gains yourself. If you're willing to do the research, you can see the gains yourself. And if you have the strategy when you're going in, you've managed your risks, you have an exit strategy, and so there's almost only upside, okay? I can't say that it's all upside because it's risky, it's volatile, but if you know what you're doing, you're careful, then you're able to see the gains, that 10, 20, 30x, it happens. But you got to be there, available on the market, already invested when this happens, and know when to pull out. That's a big deal too. Quickly, Blockfolio. I mentioned, there you go. That was a picture taken yesterday, less than 15,000. It's up to 17,000 today. This app, I don't know why you can't see that little the top of it. Oh yeah, the next slide shows the. There you go, Blockfolio. It's an iOS or Android app. If you are interested in doing this, and it's a free app. Yes, it is a free app. Both Apple and iOS and Android platforms. What you can do is what I just showed you over here. You can see all the currencies there. You can just put in entries of Bitcoin. You can say I want to put $100 in here, and see this. What says I've got $1,600 or 1.05 Bitcoin in here represented. You can buy one of each, one, and then watch what your portfolio does. Of course, if that's your scenario, you would want to have the amount of money to invest in each of those. But if you want to do it that way, you can just say, I've got $100. I'm going to divide it into 10 and buy, $10 worth of this, $10 worth of this, and then just watch, over X amount of days and see what it does. And decide if this is going up, if this is something I'm interested in, then you can either study more to find out why they're going up, or you can also just say, hey, I'm ready to do this. My picks are doing well. I have a strategy, and we got a My Quick Tip Investing group on Facebook. You can just join there. We're talking about what we're doing all the time, constantly. Even this morning, last night, you just boom, talking about what we're doing all the time. So you can learn as you go. And like I said, the research, more minds makes the research easier for me. And that's really the direction that we need to be going. That's Blockfolio. Again, now, it doesn't matter how much money you made if you don't secure it, right? Any hacker can get into your account and secure it. I think the basis of all your security should be two-factor authentication. When you go to Coinbase or Poloniex or any of the other things, even if you want to do it with Facebook, if you want to do it with your email, it's basically having more than one password set up. And I've got this Google Authenticator, which I recommend, set up on my phone. So if I sign up if I try and log into Coinbase, it's going to ask me to have an authenticator code that only my phone is getting. So even if somebody had my password, they're still not going to be able to get into my accounts, right? So it's just a two-step process, and it keeps you. They refresh every 15 seconds or something. Yeah. So it's a very good way of bringing up your security. So the other thing is I don't want to use Wi-Fi anymore. But for those that do, when I do, I use a VPN. I'm not making all this stuff that I'm telling you about. I'm not getting commissions on this or anything. I'm just telling you what I'm doing and what's helping me. Private internet access is $3 a month, and it encrypts your data. Okay, so basically, it masks what you're doing. So if somebody wants to get in, that's a huge layer of encryption that they have to pass to even be able to get to your data. I use that all the time. Every time I sign in, I make sure the little green icon says this little green guy shows up on the browser and says that it's the VPN secured. And like I said, Coinbase is the number one platform that I started using. It's an awesome platform. I don't know why you can't see the top of their Coinbase. It's still not working right. But basically, you can buy Bitcoin, Ethereum, and now they've added Litecoin. Litecoin's at maybe $30 or so right now? Okay, $30. It's when it hit, the platform was about $20, right? It was 16. That was 5 days ago less? Yeah, 5 days ago. Okay, so there are different price points that you can get. You don't have to get a whole coin with any of these. They're divisible down to the 100 millionth place. So you can buy whatever. You can start at $5 if you want to into each of these if you would like. And percentages work on every dollar amount, So if it goes up X percent for the coin, that's how much your dollar amount's going to go up. So something to consider. The other thing that I do, if you want to know how to get your money out, Coinbase can tie directly to your checking. Mine is tied directly to my normal personal checking account. And you can cash out and go straight into your checking if you want to. I showed you guys last week the transfers of thousands of dollars that I've already done since 2015. And this Shift card will pay in Bitcoin. You don't have to translate anything. It just works like any other debit card. It'll debit out of the Bitcoin and pay in cash to whatever vendor you're using, Best Buy or gas or whatever you want to use your money. This will convert. And this is based on This is Coinbase account, so you don't have to set up a new account if you go through Coinbase. Does everyone take it? If they take Visa or MasterCard, they get cash. There's no different from another vendor. And I think the last thing here, GDAX is another extension of Coinbase that gives you more options than Coinbase does. Okay, you've got your limits here, your buy and sell, and you can place orders ahead of time. And after time, for auto sales to hit, so you don't have to worry about time in the market and missing out on something. These are the same thing with Coinbase. Will set you can set alerts. If a coin goes to a high value where you want to sell, you can set an alert. It'll ping your phone and your phone and say, hey, okay, well, I'm going to sell now. All right. Or if it dips to a point where you want to buy in, you can set an alert and boom, it'll show your phone. Then you can buy, through the app. So highly recommend if you're interested, Coinbase. I do get $10 if you spend $100 into the account. If you do that, if you use my link, you can go right now on your phone, sign up. I don't get nothing. I don't care. I think you guys should get it either way. And most of the time I forget to give my link anyway. So I've signed up a dozen people and, got one person that actually used my link. So, okay, so there's Poloniex. This is my favorite one to play on. And these values are in Bitcoin. You see it's in the Bitcoin tab. And this, you can scroll down and see all these currencies as they go through. And it was something that was helpful that I didn't know when I first started. If you hit this USD tab, you'll get the top, a few of the top currencies that are, the valuations are shown in US dollars instead of Bitcoin. So you see I've just clicked here on that USD tab. 3 cents. This is what my dad got, and it shows Bitcoin right now 1584, and it's up to 13 cents. Ripple, there you go, 13.5 cents from the less than a penny that we got in. So it works. It's not, illegitimate. Multiple world banks have looked into these technologies and validated them. And I encourage you guys, do the research, figure it out for yourself, and figure out what kind of investing can do for you. If you don't want to leave your money in these exchanges, you can pull it off. This is a Ledger Nano S, and in fact, it's got these little keys on the side. You got to put in a PIN to even use it, and you have to have a 24-word passphrase to be able to open it. So if somebody took this from me right now, even though I have currency on it, they could do nothing with it without the PIN and the 24-word passphrase. And after 3 tries, it just wipes clean. Now you're saying, oh no, you just lost it. No, you just rebuild it through the software, and you got all your currency still there. So there are multiple layers of security that you can use, multiple points of entry, and I just encourage you guys, if you're thinking about it, start doing the research now, figure it out as you go, and we'll help you. We'll help you get there. So let's go ahead and take some questions.